Well, this week is going to open with one of the most politically loaded events we've seen in a while. Trump has announced he'll be speaking directly with Putin and Zelensky and then with NATO in what he's calling a push to stop the bloodbath in Ukraine and negotiate a ceasefire. Now, look, love or hate the guy, Trump is not a man known for failing in negotiations, especially when they're televised or politically strategic. So even if he comes close to a resolution, it could ignite optimism in risk markets across the board, including crypto. But, and this is important, while any news to be delivered during these meetings may spark euphoria, these types of political moves often come with extreme volatility. That means we're fully expecting a false move week beginning setup, just like we always look for this time of the week with the TBD system. So before we look for signs of what that might be, let's look at some of the key headlines that are fueling this early bullish bias across crypto. Rich Dad Poor Dad author Robert Kiyosaki is back with another bold prediction. He's predicting $250,000 Bitcoin by the end of 2025. Now, whether you take that literally or not, what matters is this. When these types of legacy figures start throwing around huge numbers, it's often a sign we've entered the euphoria phase, the stage where retail starts piling in. Now, this is big. Fundstrat's Tom Lee, who's been one of the more accurate macro analysts in recent years, just said the US stock market looks even more favorable now than before the trade war even started. He says, from a company perspective, companies survived, I think, a black swan event. Did they though? I mean, when you look at this, 246 US large companies went bankrupt in the first 4 months of 2025. That's the most in 15 years, and it's more than double the count seen in 2022. Anyhow, he specifically points to lower inflation, healthier earnings, and a shift in Fed posture as reasons for the optimism. And remember, if equities are risk on, crypto tends to follow. Dan Crypto has posted the Coinbase Bitcoin Premium Index showing the demand for spot Bitcoin. And he's saying here that a good part of this is coming from ETFs and 𝗟𝗶𝗃, who both accumulated billions again during the past few weeks. People believe 𝗟𝗃 buying is a bullish sign. Now, I don't subscribe to this narrative personally, but these kinds of statements going viral is a psychological sign that we could very easily shift into high time frame breakouts very soon. And this article here compiled multiple analyst predictions, including targets of between 114 to 134K. Why aren't I ever featured in these articles? I've been saying that for months. But anyway, according to actually famous analyst Martinez, Bitcoin remains in an accumulation phase with key support holding near 90K, a level critical for sustaining momentum, and his model suggests that 120K could be the next major milestone if Bitcoin avoids a significant breakdown. So the key takeaway here is that the headlines are loud, the targets are wild, and the psychology is shifting. This is a classic euphoria stage behavior, and while that can lead to huge gains, it also means complacency and traps are more dangerous than ever. All right, so now that we understand the market psychology, let's take a look at the Bitcoin price action. Now, if you haven't already, be sure to hit that like button for the YouTube algorithm, and let's get right into it. I'm going to start with Bitcoin on the daily time frame. As always, we can see here that we are just in this accumulation range holding above the daily time frame 10 EMA. That's rather bullish at this point in time, but the way that I personally see the daily chart is I see a very clear 3 hits to the high here. We've got this huge green vector here, another one here, and then another one here. Now, what tends to happen in high time frame analysis is that within rises and drops, you will see 3 hits in that direction. So this here would count as a level 1 rise on the daily time frame with the 3 hits inside of that level 1 rise, which actually, when you think about it, is extremely bullish. The question that we have from here is, will Bitcoin pull back first into potentially this liquidity zone between about, say, 90 to 94K, or will it just accumulate and then have a full-on breakout from there? What you need to understand is that both of these are highly possible. Whilst Bitcoin retracing first into the liquidity zone, then taking off, would be the preferred price action that we'd like to see, very rarely, if we're going to enter the euphoria stage, will we get what we want. So I would not be banking on this pullback. Of course, something like this would be best case scenario for long positions positions that aren't long yet, so traders looking to go long at the best price possible, they would want to pull back before entering. Nobody wants to long at resistance that it also happens to be around the all-time high. Nobody wants to take a long position from there. But will the market maker make it easy for you and give you that nice pullback to get a beautiful daily 200 EMA entry? Also, probably not. So the two scenarios that we have to be prepared for here is the ideal one being the pullback, which is also the least likely one because it's what everybody's going to want. And then the second scenario is that we just continue to consolidate at the high, hold a particular EMA. It's probably not going to be the 10, but let's just say we hold the 20, or even if we consolidate for a really long period of time, it could end up being that we hold the 50. But something like this would be a month play. Nobody wants that. We want to break out much sooner than that. But all of these daily EMAs acting as support are the ones that we need to pay attention to. And if we do just range here, then the longer we range for, the more we have to set up for one or two possibilities. If the price doesn't break out next week and we do just enter into a range, at the end of that range, one or two things will happen. Either there's going to be all of a sudden bullish news that is unexpected, that we don't know what we're waiting for, and it just shoots straight to the upside, not giving you a chance to enter, unless of course you already entered in the accumulation, which would be best case scenario. Or it accumulates here for a long time and then you get a stop hunt down and then the fast move to the upside. And that stop hunt might come to an EMA. There'll be liquidity that has built up first, and that's why it comes down for the market maker to take it before moving in the other direction. One of those two scenarios is only going to happen if we accumulate for a long period of time. We don't want that. We want a good result out of Trump speaking with Russia and Ukraine, and we want to break out from the daily high. We want that to happen next week. But the chances of that happening are maybe going to be identifiable on a lower time frame, not necessarily the daily time frame. So with that in mind, let's go and have a look at the 4-hour chart. Now on the 4-hour chart, if you've been following this channel, you will know that we have completed our 3-level rises according to the 4-hour time frame. And so now we're waiting to see what can happen next. So it's not automatic that after 3 rises, you get 3 drops. You can get what is known as a reset. And so that's why when you finish your 3rd level, you then need to be looking for hints of who is trapped. If you can identify who is trapped, then you can identify which way the market is going to move next. So for that purpose, we're interested in this range right here. And to identify who's trapped, you really just want to draw a box around where you see most of the candle close highs, kind of mixed with some wicks as well, and most of the candle close lows. And then you want to see which way are the spikes heading outside of that range, because those spikes are what is inducing positions and also liquidating existing positions. So this stop hunt right here would have stopped out people who were short, but it also would have induced long positions. Now at this point in time, those longs probably aren't liquidated, but they are definitely trapped because price has not returned there. So they're sitting in a tiny drawdown, and if they're holding on to those trades, they're banking on the price breaking out next to prove that they were right. And if the price actually breaks down instead, then they will be liquidated. The same goes for this wick here, but in the opposite direction. So shorts got triggered here, longs got liquidated, and now shorts are in a little bit of a drawdown, waiting for the price to come back to entry where they will either get out or the trade will move in their favor. And if it moves in their favor, longs that are also in this area right here will then be the ones who get liquidated. So currently what we're seeing is the trap being set either side. That is the market maker building their positions before they make the next big move. Sometimes if you want to identify what they might be doing, you would also look in this range, especially at level 3, to see if you can identify if there is a retail pattern forming, because what tends to happen is retail patterns like triangles, wedges, things like that, they will play out at the right levels. Like they would play out in between level 1 and 2 and in between level 2 and 3. But at level 3, they don't tend to play out. That is when the trap is set. So if we look for a retail pattern here, we're simply just combining the highs and the lows and seeing if that gives us a pattern, which it does in this point in time. It gives us a symmetrical triangle. That makes it quite easy actually, because if the price breaks out, especially when you consider the timing, because it's false move week beginning time and we have big news coming out, it's very possible that something like this could happen where we get the breakout to the upside because it's a symmetrical triangle, and retail traders believe that a symmetrical triangle is a continuation pattern. So if the trend was bullish prior to the triangle, then the breakout should be bullish. So on that breakout here, this is where retail traders will FOMO into their long position. That's obviously late retail traders. Other retail traders are probably already long, so they're fine. But the late ones is the ones that's the easiest for the market makers to take out. So they will FOMO in here if we have a breakout, and then potentially you have this liquidation hunt. We know we've got a lot of liquidity up here, and then you could have it reverse and head back down. That's a big danger, especially if we start seeing mixed messages coming out about how the negotiations are going. It might end up being one of those weeks again where it's not worth trying to trade that false move that opens the week, but instead let it happen and then take the trade after once you now know the trend. Could it go the other way? Yeah, it absolutely could, but we will have a look at the liquidity when we move down into lower time frames. And before I do that, if you are looking for somewhere to take your trades on, consider checking out Bitunix. It is a non-KYC exchange, so you should be able to use it no matter where you are located in the world. Bitunix offers spot and futures as well as an earn program, which is a pretty new program that gives you stable and high returns with secure investment solutions. And if you use the link in the description of this video, you will get a 20% trading fee rebate for life, meaning that you will get 20% back of all your trading fees for life, and that definitely adds up over time. Here's a real user example. So this user initially deposited $6,650 and was trading with that amount of money. The fees that they paid in 1 month of trading was $8,450, and with the rebate they got back $1,600. So that gave them an extra $1,600 to continue trading with, which they would not have got if they joined Bitunix any other way. So it's definitely worth getting those trading fee rebates when you can get them, and you can only get this one if you join Bitunix using the link in the description of this video. Okay, so speaking of liquidity, let's go and have a look at that for Bitcoin right now. Now, what I'm seeing currently is some pretty big clusters below price. The key areas below price are 103,230, 102,138, and then lower down at around about $100,000. There aren't really as big positions above price, which is very interesting. And it does mean that the market maker is going to collect more liquidity if they send price down rather than up. But sometimes they keep this trapped for a reason. So that's not enough to tell me that they're actually going to send it down first. I want to do more investigation before we draw that conclusion. So I want to have a look at what's going on with the CVDs to see where is the trend actually coming from. One thing I find interesting is this large sharp drop here in the open interest. That happened as the Bitcoin price was moving up, meaning that drop there is liquidations. So liquidations happen as the Bitcoin price moved up. This is on the 15-minute time frame, and it's only a few hours ago. So that could be telling me that shorts are currently heavily opening and they're getting wrecked almost immediately. When I look at the spot CVD, this one here, it's down, which isn't a good sign. If we're in an uptrend, we want the uptrend to be supported by spot. That's not happening. We are seeing an increase in stablecoin margin futures, and we did have a sell-off in coin. They're picking up a little bit now, but it's still fairly flat. I also want to check the funding rates, because funding rates are a pretty good indication of when things are going to turn around. And currently the funding rates are really quite neutral. There's no standout there. Bitcoin is at 0.1 and most of the alts are pretty neutral as well. So that's not giving us a red flag, which can be a good sign for continuation as well. So I'm going to draw my conclusion on all of this when we have a look at the lower time frame charts. Before we get there, if you have not already, be sure to smash that like button if you are learning something saying on this video. I want to quickly have a look at the dominance first because, of course, this is going to give us an idea of what exact cryptos we should be trading this week. And so when I have a look at the Bitcoin dominance, it looks like we're coming up for a retest after our initial drop. Now we have to make sure that this retest doesn't turn into a continuation of the trend, just like it did here, right? So when we had this initial drop in November, at this point in time here, we would have been waiting for this to be a retest before further downside as well. And what actually happened was we changed the trend and continued up. We don't want to see that happen if we want to see alt season. So we want this retest to not actually follow this pattern. We now want to see this actually come down at least to the 200 EMA and then reassess from there. So this is going to be a key one to watch if you're interested in trading or accumulating alts this week. In addition to that, when we have a look at the stablecoin dominance, this is great. This looks great to me. I like that we've broken trend. We've come down, we've consolidated and broken down further. Now we're consolidating under the 200 EMA. This is all great because this is a sign of risk on. So right now people aren't shifting back to stablecoins. Perfect. We want to see continuation of this trend to the downside. And then when we have a look at the totals minus stablecoins, again, we're waiting for that retest. So we have this initial move up. We've broken through all the EMAs. Great. At worst, it can head back down and come somewhere into this zone to retest the EMAs. As long as we hold there, then we should expect that we're going to go up for another higher high soon, and that will be positive for your altcoins. Now, if your altcoins do rally this week, just a quick warning, especially if you're sitting on heavy losses from meme coins this cycle so far. If your altcoins take off, even if it's not this week, but sometime in the near future, and especially if Bitcoin breaks a new high, the meme coin hype will flood the timeline again. And here's what I want you to remember when that happens. There is no major meme coin that isn't being pumped by paid influencers. And most of those influencers sold their soul for either a 50 to 80% discount or free tokens in exchange for promotion. This makes the chance of you actually making money from these things extremely low because by the time you hear about it, you're already late. There's an incredible article here that just dropped on Crypto Slate from someone who's created over 100 meme coins. Now just read this. He literally says here the easiest way to make money is to deploy a meme coin, run it, and then sell it as soon as you see profits. He says here, in rug pulls or pump and dump schemes, bad actors create a worthless meme coin, use false or paid endorsements to promote it and sell it as soon as the price goes up. The creators usually control a large portion of the tokens and selling off the pile causes the price to crash. So if you're down, I just want you to remember that this bull market will give you more chances, but only if you stay smart and if you stay strategic and don't get baited again. So if you want to be that smart guy, then consider joining us over at Trade Travel Chill. My soul is not for sale, and all we do over here is teach our trading strategies in depth and provide you with daily market updates so that you can stay ahead of the system. If you're interested in learning more about Trade Travel Chill, the link to our website is in the description of this video, and you can check out our multiple membership options. All right, now let's go and have a look at the traditional markets. The S&P over here has closed fairly bullish last week. It's come up into my area of interest. We want to make sure that we don't open next week with a rejection. The only way I could see that really happening would be if there is bearish news out of the Trump meetings. Failing that, there are other vectors higher up that I would expect to be the target next if we continue this slow trend. A slow trend is a true trend, so this is looking good, but we do want to see it break the area of interest and come up into these vectors next. The Nasdaq is also looking very similar to this. It did just break my area of interest on the close last week, so that means we now move the target up to this red vector here, and we want to see if the Nasdaq heads up into that zone next week as well. The Dixie, I like to look at the Dixie on the weekly time frame because there's a multi-decade channel here, and what has been happening recently, we have a little bit of a retest after breaking below the weekly time frame 200 EMA. This candle has closed with quite a large wick to the upside, which is a bearish close, so we are hoping that we continue continue to reject the 200 EMA and continue our way down to the bottom of the channel. Coincidentally, the bottom of that channel currently is also lining up with the weekly time frame 800 EMA. So if this does continue to head down and the stock market continues to head up, that's all going to have a good effect on crypto as well, and crypto will likely follow to the upside. Now, speaking of traditional markets, we need to be aware of upcoming news for this week. Besides the Trump, Russia, Ukraine meetings we already know about, we've actually got a fairly light macro calendar this week, at least until Thursday or Friday. So the main ones for Thursday is the unemployment claims. These are always watched closely for recession signals, but right now they're more of a background risk unless there's a huge surprise. It probably won't shift the market too much, but the flash PMI is the one worth watching. Flash PMI is a real-time economic activity metric. A strong reading could reinforce the risk on narrative. A weak one might cause the markets to hesitate. And then on Friday, we have a lesser important news event. We have the new home sales, and this one is the annualized number of new single-family homes that were sold during the previous month. The new home sales is a leading indicator of economic health because the sale of a new home triggers a wide-reaching ripple effect. For example, furniture and appliances are purchased for the home, a mortgage is sold by the financing bank, and brokers are paid to execute the transaction. So therefore, if you are a swing trader or holding open positions, mark Thursday and Friday on your calendar, as that's where the midweek reversal potential kicks in. Now, I want to go and have a look at the smaller time frames for Bitcoin and see if we can identify where that false move might happen this week. Now, when I have a look at the smaller time frames, I'm on the 1 hour chart currently. I'm just looking back to what has happened in the prior week or two. As you can see, I've marked here the 3-level rise was pretty easily identifiable, and since then, last week was a pretty choppy week. Now, if you're new to this channel, you may not be aware that rises and drops don't necessarily have to increase in price. They're not about price rising or price dropping. They're about spikes in volume. And so when you look at these rises, we had the spikes in volume that count as rises. The spikes in volume are shown by the green and blue candles on the way up. On the way down, we look for those spikes to be red or magenta. And those spikes down can happen in a consolidating range, in which case they're just called sideways rises and drops, and these ones are called stacked rises and drops. So when I have a look at the price action from last week, first of all, I thank the Lord that I was so busy and I didn't have time to trade this because how boring. But second of all, what I can eyeball here is I can definitely see that there were 2 sideways drops. This was one here, and this through here would be number 2. So is it possible that there's a third drop coming? Yeah, it is possible. And when that liquidity is to the downside, especially the numbers are so large, if you compare here, these are the 236 million that I showed you on high block, but above price, they're at about the 100 million range. So like I said to you earlier, it's definitely in the market maker's best interest to send the price down before up. But look, they don't even have to send it far, because if they initiated the false move just down this far, they're going to wipe out 2 of those $236 million areas. Now, all I actually have charted is the highest levels of liquidity. So in between these, there's a ton of other liquidity as well. So they're really going to collect huge profits only if they send it down to about 102K. So it's possible that we spike down. That gives us the level 3 drop, sideways drop would still count. And then maybe it comes up after that. The other thing about that is with that retail pattern, it would liquidate people. So I'm just going to draw it back here. So remember the symmetrical triangle that I told you about on the higher time frame. If the market makers wanted to be real tricky, they would know that retail are going to be opening long positions at the pointy end of this triangle, because like I said to you, it's a continuation pattern, so it should break to the upside. So if I wanted to be a tricky little market maker, I would send it down first with a fake wick before sending it up. So definitely keep your eye out for that. Now, I'm not saying it's going to necessarily come and take down the lower one at 102. You kind of have to watch all the levels. I would especially keep my eye out for what happens at this one. Now, this one is at 103, 230. So you need to be watching, if you're looking for an opening week trade, you need to be watching what happens if the price does come back down to this level, because it's going to be around the 50 EMA on the 1 hour time frame. It's going to still stay within the triangle. And if that candle spikes down fast and closes as a hammer, that might be be all the damage that they wanted to do before breaking out. So this is going to be the play that you're looking for initially. If you don't see that high volume spike into this level and then break out, then you would expect that it's probably going to give you the false move down, which might come down to this level. And if the week opens and you don't get a strong buy at any of these two levels, then I would start to change my frame of thought and think that we're in the one-day trend that happens after the false move, and we're actually likely going to trend down to the lower one that's at around 100K. And then if that did happen, that's when you'd then be looking at the session changeovers, so Asia into UK and UK into US, just depending on how long it takes to get down here. That's when you're going to look for reversal signs to switch your position and take profit on the short if you happen to get it. So that's my best case scenario. Without the false move having actually already happened, I can't really tell you what's going to happen. I can just tell you what to look out for. And one of those three scenarios is definitely what I would be having my eye on for the week opening this week.